Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Tuesday morning. Everybody's having an amazing day. Welcome to the Daily Market Commentary. I am your host, Chuck Fulkerson. We're about to do what we do each and every day, looking at the same 10 to 12 futures markets, identifying potential breakouts and reversals from an educational perspective. Yesterday, we had our DMC, and we have a few things to review from yesterday's trading room. For those of you that are new to the channel, do me a favor. There's a little subscribe button down below, a little notification bell. Hit that button. If you're not new to the channel, quick question. I want to do a webinar, an educational webinar, but I'd love to hear what topics you'd like to see addressed. So in the comment section below, let me know what topics you'd like to see addressed on our next webinar. We do these about once every couple of months, educational webinars. Last one we did was options on futures. I'll put a link to that down in the comment section below if you'd like to watch the options on futures session that we did. So leave a comment below on what you'd like to see from an educational perspective. So let's dive right in. So starting with the S&P. And in the S&P, let me get the right chart up here. So starting with our S&P futures markets, we're up about 9 3/4 points this morning. Now, we had a breakout level here above 2,900, and a lot of people were able to catch that level. And this is a great picture of old resistance becoming new support, right? That old area acted as a support level, and price rallied back off of that level pretty hard, pretty strong. We had our little demand level in here as an opportunity to buy, and so that area we did not quite get the full retest of, but in the NASDAQ is actually where our setup was. So here was our setup in the NASDAQ. So yesterday we looked at this as a potential breakout to the upside. And that breakout to the upside has hit, and we've gotten a really nice move up on that breakout to the upside. So I would now at this point in the NASDAQ trade, take your stop and move it to break even underneath this little area of demand. That would lock in a pretty good little run. We're up about 24 points in the NASDAQ since our breakout. And so if you caught that breakout, do me a favor, leave a comment down below. Let me know if you're able to catch that one and get a little run. So I think now's the time to take your stop, move it up to break even. When I look at the 4-hour chart and I say, okay, well, where can price go? Well, we're sitting basically right at our all-time high. We're about to put in a new all-time high. And so I think now's the time to let your stops or let your trades continue to run. And so a lot of people are kind of afraid of using trailing stops, but this is a good opportunity to use a trailing stop. However, I don't use trailing stops based off just percentages. For me, in a trail stop, every time price comes up and creates a new, kind of creates a new swing high, that's where you take and adjust your stop, right? So now we're on a 4-hour chart, but let's just pretend theoretically that price, rallies up, and we get a little bit of basing, maybe even a little pullback, and we rally up. Well, at that point, you may take your stop and move it up to here. Right? And price then, comes back into here and rallies up again. Well, now you take your stop and you move it up to here, right? And so this is a way of placing a trailing stop that is it's more manual, and it takes a little bit more work. But don't just expect the computer to do all the work for you. So that's what's going to keep you in your trades a little longer, to allow those things to run, because let those big winners keep going. Don't move your stops so tight that you get stopped out. You wind up with a 20-point NASDAQ move when what really it was a 120-point NASDAQ move. So, all right, next, let's take a look at the crude oil. So now in crude, yesterday we had talked about our supply level getting hit, and that worked out very well. Then price came into our confirmation level for demand, and then it rallied up to our supply. And so now both of these levels to me are taken off the chart, okay? We came back down from there. So it just moved from supply to demand, back up to supply, and now we're chopping sideways. So now I still have this area here up above, which I'm going to wrap some lines around. This area right in here. And that would be a potential for a reversal trade if price makes it into there. And an area down below. But I don't want to force a trade until we get to that area. There's no reason to force anything until we come into one of those levels. You could go down to a 15-minute chart If you really want to get more specific, on a 15-minute chart, it makes me look at this little area down here as a potential as well. So you might actually want to move your stop to below here if you take this long. Gold. So looking at gold, we had talked about this supply level here up above. That's off of the breakdown from this area. Some of you are still in the gold short. We had a breakdown in our live trading room on Sunday evening. Those of you guys that joined the Traders Army live trading room on Sunday evening, hopefully you were pleasantly rewarded with some of the trades that we had that worked out very well. So that would be in this area here for a bit of a pullback. Price did come back into there, but you once again let your profits run, and it's still running your way. So those are our four main markets that we look at: S&P, Nasdaq, crude oil, and gold. Now let's talk about bonds and currencies. However, there's not a lot to talk about in bonds and currencies from the futures perspective, right? From the futures perspective, because we've been kind of sideways. Had a few areas though that did hit, which invalidated their entry. So let's cover them. In the 10-year note, so we have our 10-year Treasury note here. So looking at the 10-year, we've got our level of demand, we've got our level of supply, and prices in between them both. And so basically, it's exactly where it was yesterday. Yesterday, when we looked at it yesterday morning, it was here. And right now we're here. So it's really not done anything, and it's really just stayed in that tight range, so there's no reason to force a trade. In the Aussie, we'd identified this level. We came close to it, so we converted it to a confirmation long, and price blew through the level. This is why we use confirmation entries. The level was still a fairly quality level, but because we blew right through it, it lost some of its validity, right? And so there's no reason to enter. This is a good picture of the trade being triggered but not entered, right? So halfway into the level is when the trade gets activated but doesn't get entered until it comes back out. So now we went through there, so that level's no longer valid. However, we did create this speed candle up above, which could act as a price magnet, okay? Now, this is the speed candle that was created up above. However, if you're so inclined, you could theoretically take a short on a breakdown below this candle's low. The only fear of that is that I don't have a true pivot up above me. Remember, I want to place my stop above the pivot, and I'm not really getting a true pivot as of yet. So you also have a little bit of demand down here, and it makes your room to roam a little bit weak. So I like the reversal better than the breakout, but if you really want to try the breakout is available. Next, on the euro. So in the euro, same kind of picture. We actually went through our little euro level, which now we switched it to a confirmation because of the basing before the level. So with that being said, I need to remove that area. And now we have some areas still up above us that we can look into where there could be a reversal coming. I'm looking here at the 15-minute chart. And on the 15-minute chart, going a little bit more, just wrapping our lines around this as the origin of the last move down. Okay, now my problem with this is it's not completely fresh. And it's not fresh because this little wick here was one of the retests of that area. So I'm actually going to put that as a confirmation entry, and I'm going to make it purple because we found it on a 15-minute chart. So a purple confirmation entry would really be my lowest probability entries, but they do still sometimes work. Next would be Canadian dollar. We rallied right back up to our supply level, our supply line on the top of this triangle that's been forming, and fell off of it. And we didn't just fall off of it, we fell off of it hard. So for those of you that are trading inside the triangle, then you are, still doing okay. But we did break out below the bottom part of it. So since we broke out below the bottom part of it, your better opportunity in my mind is to be a seller. But I'd want to be a seller on a rally to a decent supply area. So looking at the 15-minute chart, where do I have some decent supply? I've got some areas up in here. I think this leads to a good opportunity for candle-to-candle trading style. When I get a candle that has a lower low, then I can take it. We're getting some buying pressure down here, which may give us a little bit of a pop up. And if we do get a little bit of a pop up, let's see where it rallies back in here. But this is a good opportunity for a candle to candle short. Last but certainly not least is the Great British Pound and the Japanese Yen. And I'm really kind of getting tired of saying this. Pound's going nowhere. We're still in between our levels of supply and demand. And so don't force it, right? Just because you're looking at the same market and it's not doing anything doesn't mean that you've got to force anything. Japanese yen as well. We are below our supply level, which we converted to a confirmation short. And so it's a little bit weaker. With all the basing below, I'm going to take that level off the chart and add a potential breakout short below here. Change the strategy there. We might get a rally up into one of these regions here. And so as I look at these regions, all of these areas could be potential rally points, but this is the best one way up in here. So for now, I'm going to let that one be. So those are our levels. A couple of trades in there that we had confirmation entries that price never met entry. Triggered, not entered. Remember that distinction, triggered but not entered. And as long as we remember that distinction, what it does is it allows you to set trades up that don't necessarily enter, and that's a great way to protect yourself, right? It's to know what's my probability of getting filled on some of those areas. So hope you guys have a great day. If there's anything you need, please send me an email, support@tradersarmy.com, and I will talk to you soon. Later.